Good afternoon. On behalf of the TCU Energy Institute and the Energy MBA, welcome to the Kenneth W. Davis Jr. Leaders in Energy Speaker Series virtual event. I'm Richard Den, Director of the TCU Energy Institute. First off, I would like to thank the family and friends of Ken Davis for their continued support of the series, to Charles and Michelle for their help in setting up this event, and to all of you, whether this is your first event or you have been to all of them. Today we'll be using a webinar format. If you have a question during the talk, use the Q&A button. We will try to get them as they come to them. This afternoon's event will be hosted by Ann Blunzer, head of the Energy MBA program, who will be introducing our speaker. Ann, it's all yours.
All right, thank you, Richard. Thank you to the TCU Energy Institute and all of the board members and stakeholders at the Institute in your support and what I think is the most important goal that we have at TCU, which is to educate our students and our community and our alumni and to continue that conversation about what's important and what is going on in the energy industry. And even more important, to hopefully bring people onto campus via Zoom, however it may be from your home, to really have even a deeper understanding of maybe some of the current challenges that our industry is facing, and possibly looking at it through a different lens and possibly thinking about the opportunities that are out there, especially at this time when there is a lot of transition, not only the talk of the energy transition, all the issues with issues and opportunities with ESGs and what that is presenting to all of our companies and supporters in this space. And then lastly is, you know, the new administration that looks to be taking over the White House, and what that will mean for us and this industry, and hopefully ways that we can leverage that and capitalize on some of the good work that's been done in energy so far and build on it. And so Richard with the Institute, myself, Dean Pullen at the Neely School of Business, are thrilled that today we have Ashley Zumwalt-Forbes joining us, and more than just her sharing her knowledge and experience thus far and her ideas moving forward, but has also agreed to serve on our advisory board at the Neely Business School. And we are thrilled to have her energy, her enthusiasm, and her intellect. She comes from I think a really unique place. So then undergrad at OU in petroleum engineering, actually working in engineering for XTO Exxon, and then going and getting her MBA at Harvard Business School, and is now come back to Fort Worth, leading the charge with Black Mountain Metals, along with some other initiatives that she's going to be sharing some of that with you today. But I believe her to be a real thought leader. She represents a different generation than typically who's been at the C-suite level in our energy companies. And I'm thrilled and honored that she is willing to share her time and expertise with TCU and with our extended community. So at this time, I'm going to go ahead and turn it over to Ashley, and I'm going to block my screen out, and you can have it from here.
Excellent. Thank you so much for that, Anne. That was such a kind introduction, and I'm very, very happy to be here today. So I have a few slides. I'll try to not belabor any points. And please use the chat function to send through questions. We've reserved most of this segment for Q&A and to really get to the meat of, you know, what y'all want to talk about. So definitely want this to be an open and collaborative discussion. So shoot through your questions on the chat. So we'll just jump right into it. Okay, so I'm a big believer in keeping things very simple and straightforward. First of all, I am here to tell you that I know the term energy transition can seem very scary, but certainly disruption is always an opportunity for value creation. You know, personally, my view on how energy transition and the future of energy looks, I have two kind of core pillars for, the future, and specifically kind of the future of natural resources. And that really revolves around natural gas and batteries. And so I have some more slides that really go further into why we've taken this view that these are the two kind of most promising opportunities for having prevalent, low cost and low carbon power for our world. And we'll get into that. But, first and foremost, I want to come out and say, like, I'm not here to tell you that I think oil and gas is completely going away. Counter to that, I think there are a lot of really common sense things we can do to take older energies or older forms of energies and really lower the carbon emission basis on those and really bridge that gap in again very common sense ways to a greener and brighter future. So second bullet point here, over the course of human history, efficiencies have won out. And so regardless of whether or not you are a believer in the electrification of transportation, in the future of electric vehicles, an EV is more efficient than an internal combustion engine. So why is that? An internal combustion engine has less efficiency due to heat loss, and that's not something that the EV experiences. And so if you just look at purely that conversion difference and really that trend historically of efficiencies to, inevitably kind of win out, you realize that, okay, maybe this isn't just a hype that people are talking about. Maybe this truly is a bit of a shift going forward. And again, we'll dig into the value chain. We'll talk about why electric vehicles and electrification does not mean the end of the oil and gas business. It simply means some shifting around within the value chain and specifically the types of commodities that become important going forward. Third bullet point, electrification is accelerating. So I think pre-COVID-19, you were seeing headlines. Certainly there's a lot of Tesla going around, a lot of Elon Musk kind of flying the electrification flag. But something that really has come out of COVID-19, I think governments have kind of taken away the stimulus packages that are being rolled out for economic recovery and aligning them with their strategic priorities. And in a lot of instances, specifically if you look at places like Europe, places like Australia, even places like China, governments are starting to leverage those COVID-19 recovery packages to incentivize citizens to make greener choices. So I'm going to keep using this example of electric vehicles, although it's not by any means not the only kind of green choice out there or more renewable type decision that governments are incentivizing. But what you're starting to see in these governments is rolling out of EV incentives and really kind of an increased adoption right there. Next bullet, do not let perfect be the enemy of good. So I get a lot of feedback when I'm talking about our battery metals mining business, Black Mountain Metals, and really this future of EVs and electrification, and folks saying, well, Ashley, how much are you really moving the ball down the field? Like, isn't mining a dirty business? Aren't you still plugging into the grid and you have carbon emissions that way? The answer is far and away, generally, yes. And so what I think is becoming important now is we're starting to look at that holistic value chain and supply chain and knock out kind of each segment as we go along and ensure that each nail along the way is actually doing what it's supposed to do. Because the last thing you want is for a consumer to buy an electric vehicle thinking like, oh, hey, I am really doing the climate a service and again, moving the ball down the field and in reality, the metals weren't mined in a sustainable way. The grid is fired by coal-fired power stations, things like that. That's not what you want to happen. And so, inevitably, we're looking at it with blinders on and saying, this segment of the value chain, we're going to green up that segment first, and then we're going to tackle the next one. So again, don't let perfect be the enemy of good. We are moving the ball down the field, but as you all know, you can't just flip a switch and say, like, yesterday we are powered by fossil fuels, and today it is 100% renewables. It's just not the way it works. I don't know how you would raise money to roll out all of that infrastructure and flip that switch, nor is that in any way what I'm advocating. Next one, not all natural resources are created equal. So I have actually several backup slides on this one, but it goes back to my point around, mining some battery metals is quite dirty, whereas others are mined in a responsible way. It also goes to some natural gas production and processing is higher carbon emission than others. And I think the world we're migrating to is, when you're looking at the supply chain, end users are starting to care about their carbon footprints. And so I think, where we're headed is OEMs and kind of end suppliers are going to reach further up the value chain, form these relationships with raw material, either miners or producers, and start paying a premium for ethically sourced or low carbon fuels or materials. And you're really going to see a lot more certification. So a great example here is cobalt. So I'm sure all of you have read articles about how there's such a challenge with lithium-ion batteries because of the cobalt content. And something like 80% of the world's cobalt is found in the DRC, so in the Congo. And one of the dynamics within the mining business in the Congo is artisanal miners, and oftentimes those employ child labor. And so the last thing someone who's talking on their iPhone or using their computer wants to think of is the lithium-ion batteries that are in those devices, like children mined that cobalt. So there's a group called RCS Global that came in and is actually providing a certification service to ensure that the cobalt that's coming out of the Congo specific mines was mined in an ethical way, but it allows those artisanal miners to stay in the supply chain. So it's really a fantastic service and has really revolutionized the cobalt business in the Congo. And I think you'll start seeing that a lot more with different metals, specifically with emissions intensity of natural gas. I really think there's going to be quite a large focus there as well. Last one, and then we'll actually get into the meat of this thing, but no one is in business to lose money. And so what I think the worst case outcome for the energy transition would be venture funds or companies go out and deploy a ton of capital into unproven technologies. And then, again, sometimes unproven technologies work, oftentimes they don't. But what's going to happen if, you fully leverage yourself to more of the unproven side, if you don't get returns, you're just going to circle back to square one. And so that's why I always advocate these smaller but sustainable and more permanent steps forward, where you start leveraging lower carbon intensity fossil fuels, i.e. natural gas, and then leveraging batteries in order to kind of bridge that gap. So we'll dig into more of that now. Look, these are just some quotes saying electrification has begun to accelerate. Very much electrification from a battery perspective is a metals story. And so, raw materials really sit in the driver's seat here, as they always do. I mean, everything needs to be built out of something, and far and away that something is either mined or produced from the ground. And so, within the electrification space, kind of nickel and copper are two of your two main ingredients. And these are just some good quotes from some of the world's largest mining companies and OEMs who are starting to really think about where these metals are going to come from in the future, and how we're going to get there. So why nickel? And we won't spend a ton of time here. I just want to walk through like what raw materials are going to be important, and then what that differentiation is for our new net zero world. Nickel is basically what gives batteries energy density. So the more nickel that's in a battery, the further your car is going to go, the longer your phone's going to last, the fewer recharges you're going to have to go through. And so, you probably ask then, okay, why don't we just like pop a ton of nickel in there and y'all can drive forever? Nickel is also highly unstable, which is why you have to couple it with cobalt in order to stabilize the lithium-ion battery cathode. And so the estimated electrification impact per vehicle of this NMC battery, NMC is nickel, manganese, cobalt. You have about 110 pounds of nickel per vehicle and 165 pounds of copper. You also have 33 pounds of cobalt, although again, cobalt is declining a bit in the chemistry as we increase nickel and decrease cobalt. Don't know how much y'all follow nickel news, but Elon Musk, probably back in August kind of timeframe, came out and said, like, our biggest hurdle to electrifying transportation is getting more nickel into the market. So please, miners, mine more nickel. And so for me, that's really the key raw ingredient for more batteries. We won't fully kind of walk through every chart on this, but I'm happy to address it in the Q&A. Copper, this will be a quick one. All of y'all are probably very familiar with copper wiring. And so it should come as no surprise that as more things get electrified, there will need to be more copper. And so why is copper the thing that's used for wiring? So it really does come back to this conductivity measurement, and specifically, on a cost per ounce basis. So if you look at copper, silver, and gold, these are three of the most conductive metals. Silver is slightly more conductive than copper, and gold's right in there as well. If you look at it on a cost per ounce basis, far and away, you want to have copper wiring and not silver or gold wiring, which should come as no surprise. That being said, again, just to flip back here, every EV has 110 pounds of nickel, but 165 pounds of copper. So for me, it really is kind of a two-pronged thesis around batteries, and it really revolves around both nickel and copper. Okay. So again, I know I said in the beginning that I am not going to sit here and say that oil and gas totally going away, like see ya, hydrocarbon industry. I genuinely believe that natural gas it is very much the key to our energy transition. These charts are based on Australia, so apologies for that. We have battery metals mines in Australia, both nickel, copper, and a bit of cobalt, and then 1.7 million acres of dry natural gas acreage. So if you start seeing a lot of weird Western Australia references in here and wondering why, that's why. So it really comes down to this chart, and it's such a shame that people haven't done a great job of digging into what exactly the carbon intensity is of the various fossil fuels and kind of where they're used in the value chain. And I think this bottom left chart really says it all. It's this pounds of CO2 emitted per MMBTU of energy. So not only is natural gas incredibly energy dense, but it's actually incredibly clean. And so if you're looking at it from a reliability standpoint, from an affordability standpoint, and from a low emission standpoint, it's actually quite hard to beat natural gas on a per MMBTU basis. And so, that's very much something that it's in our personal investment philosophy. We're very much actioning that philosophy with our acreage in Australia. And it's something that we try to talk about quite a lot, specifically when it comes to energy transition. I think fossil fuels have become such a dirty word, a politicized word. And people haven't really done that digging on, okay, so, maybe coal is, kind of on the higher CO2 emission areas, but, there are differences in those different fuels. Okay, so this one's going to take some explaining as well. So this goes back to effectively not all resources are created equal. On this slide, I talked about how much I like natural gas, and I'm a believer in natural gas. That does not mean that I am a believer in all natural gas. I think going forward, and we're seeing this so much in where capital is being deployed, how capital is being deployed, and just the ability for companies to continue raising money and continue operating. And in fact, oil and gas companies, specifically those that are publicly traded, it's within their fiduciary duty to respond to what shareholders are asking them to do. And far and away, people are very focused on this decarbonization theme and very much the ESG type themes, which again, happy to talk about at length in the Q&A session. So I mentioned we had this 1.7 million acres in Australia. It's called Valhalla. And so these are effectively all of the undeveloped gas reservoirs in Australia. For those of you who don't know, Australia is the world's largest exporter of LNG. And what we have actually done is Valhalla is going to be the first net zero natural gas development. And you're saying, like, why are you doing that? Like, nobody asked for that. They did. People have asked. So Australia's largest LNG customers are South Korea and Japan. They have both made net zero carbon pledges and are actively exploring net zero fuel options. In fact, there have been a few net zero LNG shipments, which commanded quite a large premium in the LNG market. And it's a fantastic way to differentiate yourself and effectively bifurcate that LNG end market and really kind of climb that value chain such that you get paid more money than you would have. Second data point, this happened maybe last week before, not sure, 2020, everything is kind of blending together, but French utility shelved plans to buy LNG from NextDecade. So that's a US impact due to pollution concerns. And so we are in a position now that the requirement is on us, is on the energy company to prove that what we're doing, it is right. So, I whatever right means in your book, it is good, but generally it's whatever the customer is asking for. And so in this instance, the customers are asking for lower carbon emissions. And so we're answering. So Valhalla, it's on the kind of low end of the existing Australian fields, but we are deploying a mixture of carbon offsets and carbon capture to actually decrease our both contained CO2 in the reservoir as well as scope 1 and 2 emissions down to zero. So we're very much focused on this green natural gas concept as a transition fuel. So right now is the time. Like, you got to kind of take the bull by the horns. There's so much rhetoric around energy transition and a greener future, which I'm fully supportive of. And the oil and gas business needs to position itself such that it stays relevant in the future. I get a lot of feedback that, you know, it's worked for us historically. It'll come back in the future. Don't know that that's the case. There are some very classic examples of disruption. Some good ones being, I don't know, like Blockbuster and Netflix. We'll roll with that example. And you know, Blockbuster, being the incumbent, had this very successful business model and just really didn't see people starting to consume media content on their TVs and on their devices at home coming in any way. Once it started gaining steam, it was effectively unstoppable and they were knocked over. So the classic example of trying to get on the front foot and disrupt yourselves before you're disrupted needs to be employed here. So can't think of another example in kind of modern human history where such a large industry was going through so much change. So the energy business, like, you'd be hard pressed to find something bigger in the world. And there's a ton of value creation opportunities if you're open-minded and are really responding to the opportunities at foot. Okay, off my soapbox. So literally my favorite thing to talk about. Okay, so, and just quickly, you might have noticed on one of my prior slides, I mentioned why nickel sulfide. We won't get into it today. Again, that's a whole other conversation, but there are two kinds of nickel. One is nickel sulfide, which is what we own in Australia, so Black Mountain Metals. And then the other is nickel laterite. Nickel laterite, effectively at the elemental level, and the nickel is coupled with iron. And so it's really hard to break that bond. And you have to leverage something called high pressure acid leach. It is what it sounds like. And effectively, you know, from an energy intensity standpoint, from a pollution standpoint, and from a carbon emission standpoint, you're effectively worse off leveraging nickel laterites than you are fossil fuels. And so you need to be really careful with these decisions that are being made and how you're navigating that supply chain. And so, you know, these, the bottom left, those are some pretty good overviews of the differences in the flow charts. So again, huge believer in nickel sulfide. Again, we are working on making our operations net zero. We don't have to employ high pressure acid leach. And certainly, you know, I've been preaching for 2.5 years since we started Black Mountain Metals that, you know, there's going to be this bifurcation in the market based on this kind of, you know, being environmentally friendly. And we're starting to see that now. So OEMs do not want their name attached to nickel that it has deep sea tailings dumping or high pressure acid leach or is mined in a not like in a not safe way. And so they will pay a premium if it is certified that you're checking those boxes. So again, the customers are asking, all we have to do is answer those calls and rise to that standard. Not everyone is doing it. You're not going to look around and see, you know, we're on kind of the early days of this wave. So you're not going to look around and see everyone sticking their neck out, but it's something that we're doing that I'm really proud of. And, you know, we are making a premium on the end product. So it makes sense. Oh, this is actually a great slide. So the importance of green, sustainable supply of nickel. And again, I'm talking about nickel and natural gas. You can extend these examples to effectively any commodity. Supply chains are important now and consumers care. But there is a really good kind of excuse me, CO2 equivalent emissions metrics down here. If you're looking at nickel sulfide versus HPAL versus ferronickel NPI, and kind of the various countries there. So you can see nickel sulfide is way lower emission than employing something like HPAL or nickel pig iron, which nickel pig iron is what's found in Indonesia and Philippines. Let's see. And look, it's just easier. Like the fewer steps you have to go through, inevitably, you're probably going to control more of the value chain, because there's less processing involved, less materials, less power. So again, what I'm talking about, and far and away what investors are asking for, shouldn't come as a huge surprise. And I'm hoping nothing I've said here today is really like, oh my God, I can't believe she's recommending that or talking about doing that. It truly does make sense from a fiduciary standpoint, as a steward of investors' capital. And so I think right now it makes sense, but you fast forward 5-10 years, I think your company will be in a very disadvantaged position if you didn't get on the front foot and start rolling out those full ESG programs and really focusing on what you're doing right now. I think, look, I talk a lot, as you can tell. I can talk about anything, and so I've basically already walked through a lot of these slides. I will point out quickly, and then Anne, it'll be over to you for questions. But down here, I really like the summary of nickel sources and uses, just between sulfides and laterites, and really how they're used. So again, far and away, NPIs and ferronickels actually aren't used in batteries. They're used for stainless steel. It's because of that coupling with iron and how hard that is to break and get it to a purity that can go into batteries. But it's also because of an emission standpoint. So a bit of differentiation there. And so that is it for my, formal presentation, but very happy to answer questions.
Thank you so much, Ashley. I love the depth there. And we've got quite a few questions already in the chat room that are pretty specific to probably some of the slides that you just shared. And then we also have some of our students, our graduate students and our undergraduate students that are joining me as panelists here that probably have some broader questions that aren't quite as specific as your initiative here at Black Metals. So I'm going to just start. They're in the chat box, but I'm going to go ahead and say them. Okay. The first one was, how long will these batteries last before you replace them?
Yep.
And then can batteries using these metals be recycled to help with the supply of the needed materials? And what are the challenges with recycling metals? I'm going to lump all those into one for you.
Perfect. Okay. So I drive a Tesla. What I have been told is my battery pack will last about 10 years before needing to be replaced. That's an average. Currently, there's some recycling that happens. So I was visiting the Glencore nickel smelter in Sudbury in Canada. And what they do is they effectively deactivate lithium-ion batteries, throw the battery into the furnace, so into the nickel smelting furnace. Some of the nickel and some of the cobalt will come out through that process. The rest is scrapped. Highly inefficient to recycle right now. That being said, probably a month and a half ago, the Wall Street Journal did a really good article on some of the startups that are focused on battery recycling. I think if y'all are looking for a startup idea, battery recycling is it. But Redwood Materials is the one that was specifically profiled. It was started by the Tesla co-founder, so the one that nobody talks about, the non-Elon Musk Tesla guy, but really focused on trying to reverse engineer how to recycle these metals out of batteries. So not possible with a high recovery at this stage, but I never bet against human ingenuity. So I reckon the code's going to get cracked.
Great. Okay. This one's a little broader. I keep skipping around, but basically, Can you give a specific example as to how you develop a gas field on a net zero CO2 emission basis?
Yes, absolutely. So through a combination of, so there are kind of two pieces to it. One is lowering emissions through the production process. So maybe you're using electric frac fleets, maybe you're using electric valves, whatever it is. So you need to both lower emissions of the operation, but you also need to offset the non-removable emissions. So you can do that a few ways. You can buy carbon offsets, just buy carbon credits. Australia has a very established system. The US has a very established system. What we're looking at is a bit more intensive. We'll actually be rolling out the plan over the next couple of weeks, so stay tuned. But there are some very sophisticated carbon capture and sequestration technologies. A lot of folks use them as EOR techniques, but you can also sell it to downstream chemical manufacturers, into the hydrogen industry, ammonia, et cetera. So a lot of options there for that captured CO2.
Great. Is there any growing research on developing synthetic conductors that might reduce the need for mining?
Absolutely. Yeah. So, I mean, this is a huge area of research right now. I think you'd be hard pressed. Well, actually, as I was about to say, I think you'd be hard pressed to find a research area that's getting more dollars right now. And then I remembered we are in the middle of a global pandemic. So I am certain that COVID-19 is getting more research dollars there. So I took a step back from my statement, but certainly, you know, folks are doing a lot of research into synthetics and how you can engineer out some of these metals. If you look in the future, it is not clear where a lot of these materials are going to come from. You know, probably the last 10 years of mining, commodity prices have not been good. So there hasn't been a lot of investment in exploration. And so what that means is now that we're coming up on a phase that folks believe is another kind of mining super cycle, commodity super cycle, there aren't deposits that you can just turn online right now. And so it really is going to require people to get very creative around historic mines, reprocessing tailings, recycling, and, you know, working on what else can we use.
I'm going to kind of combine these two questions here. It's talking more on a larger scale and in regard to renewables, or however you want to phrase it, sustainable energy. Now sounds like the new word we're going to be using.
Whatever you want to call it, yeah.
So thinking decades and centuries into the future and considering the number of EVs that will be manufactured and the storage needs for wind and solar, can you speak to the challenges of mining? On the other side of that, another question was really just talking about the challenges in regard to the infrastructure and the build out of the renewable grid to meet peak demand.
Look, I in no way am trying to understate the challenge of what's ahead, and fully agree. It is not clear where a lot of these metals are going to be sourced. You know, we certainly need a lot more investment in exploration, in efficient production techniques, and in, you know, what is kind of that next generation of material that's going to be deployed into batteries. Or, you know, what is that next generation fuel that's going to be created to kind of backfill what we're doing now. And so certainly a lot to be done on the mining exploration side. Sorry, what was the second question?
The challenges with the grid of you know, when we're talking about the renewable grid and meeting peak demand.
Yeah.
Your thoughts on that?
So again, another really compelling question. NGP had a SPAC that recently de-SPACed into ChargePoint. I think, I don't know, last month or in the last quarter or so. And so ChargePoint is a really big kind of EV charging network. And they've done a good job of kind of getting on the front foot and building that out. So certainly a lot of investment to come in the charging space. I do think, again, the ball is in the court of the folks who already own infrastructure. And so really just trying to adapt your business model such that you capture both segments. So what you don't want is to only be in the segment that might be steady state or maybe declining a bit. You also want to diversify your revenue streams in your core competencies to capture those new and growing areas. On the renewable grid side, I fully agree. Like right now, wind and solar cannot be baseload power because you like when the wind's not blowing and the sun's not shining, it's really hard to bridge that gap except with huge industrial scale batteries, which we really don't have developed at this stage. There's some vanadium redox battery technologies, but that really hasn't been hashed out. And so again, I go back to natural gas being the answer for both peaking and baseload power. And you will never hear me advocating for something else until there's a technology evolution.
And what are your thoughts on nuclear? I have three different questions that are in that space. And just because of time, I'm just going to ask you, how do you see that fitting in, in the future? And then another question to follow up with that is, where do you think, the Biden administration, what kind of role are they going to play? And what are you guys at Black Mountain forecasting based off of that?
Yeah, I actually love nuclear power. I think it's really tough from a public perception standpoint. And for that reason, I don't think it's going to take off in my generation or likely even my kids' generation. Don't have kids, for the record. So got to have kids first, and then they need to come up in adults. But, I do think from an emission standpoint, it makes a tremendous amount of sense. I think it's tough from the NIMBY, like the NIMBY kind of concept. So not in my backyard. Everyone thinks it's a great idea until you got a reactor in your backyard and you're like, I don't know how good of an idea this is. And so I think it's really challenging from that standpoint. What I will say is there are some very compelling startups. There's a fund called Breakthrough Energy Ventures. It's Bill Gates kind of, I'm not sure if it's a family office or it's just kind of cornerstoned by him, but it's for like long shot energy investments that they're probably not going to work, but if they work, you're going to like revolutionize the world. And there are some really interesting nuclear fission startups. I reckon if that code gets cracked, that you're kind of getting rid of some of the NIMBY challenges because it is a different technique and fully done in a different manner. But again, I really like nuclear power. It is very clean. There is a challenge around waste, which we're going to have people a lot smarter than me thinking about. But I do think there is promising research being done there.
And what about the new administration?
Oh, right.
How are you guys adjusting? What are you thinking?
Look, so we have kind of a good variety of businesses at Black Mountain. So there's Black Mountain Metals, which we own nickel and copper mines in Australia. There's Black Mountain Exploration, which we own 1.7 million acres of dry natural gas, again, in Australia. Black Mountain Oil and Gas is active in the US, looking for opportunities. And then there's Black Mountain Sand. And so, I wouldn't say we've really changed anything that we're doing right now around the kind of administration change. I'd say we have a very balanced and very forward-looking portfolio as it is. And so, from an ESG standpoint, I'd say Black Mountain is very strong on decreasing emissions, really being focused on what investors are asking for. And it's because, investors are actively asking us for this every day. It's one of the first questions we'll get when we walk through the door. And so we're trying to be very thoughtful about what we're doing and how we're doing it.
Thank you, Ashley. There's some more technical questions on the chat that I'm going to move over, just going to skip past, and maybe we'll try to figure out who posted those and we can email them back. But we do have some students that have been a part of putting this together, and I want to reserve the last 15 minutes here for them to ask you some questions. Let's start with Ahmed, just because he's the reason you're here today and has started to connect us all. And then I'll let Georgianne ask a question, and then Skylar.
Yeah, so I'm kind of liking the audience questions. I don't mind if you can use some of those, or we can go ahead and let Georgiana get her thing going.
Okay, let's go with Georgianne then. She is one of our Energy MBA students at the Neely School, a second year that is just wrapping up her MBA. Georgianne.
Hi, Ashley. Thanks for taking the time to answer our questions today. First, I was just going to kind of go on a broad perspective of, if you're seeing this shift in this energy transition and focusing more on natural gas and minerals, do you find that the skill sets from traditional oil and gas transfer well into the mining space? How did you kind of make that transition when you started the metal side of Black Mountain?
Yes, no, so that is a very topical question, Georgianne. So as Anne outlined, my background is petroleum engineering. I was a drilling and completions engineer at ExxonMobil before I went and got an MBA. And so I'm from a small town in Oklahoma. Like, my background is fully rooted in the oil and gas business. And so, I do think, from a high level, petroleum engineering and oil and gas skill sets are very much comparable to the mining side. You're still trying to get something out of the ground. Although instead of drilling down to get it and produce it, you're trying to figure out how to get a truck down there and mine it out of the ground. So, a bit different, but from a high level conceptual standpoint, very similar concepts. Also very similar from a financial point of view. Would I ever trust myself to be a mining engineer at this stage? Definitely not. But it is something that I really encourage, folks who are studying petroleum engineering. Again, I don't think the oil and gas business is fully going away, but, if they did want to diversify a bit, mining is interesting. But what I really think could be interesting for petroleum engineers is more of this carbon capture and carbon storage concept, because it really is basically reverse reservoir engineering. Instead of trying to produce something out of reservoirs, they're trying to figure out how to put CO2 into reservoirs and hold it there. And I think that's a fantastic skill set for petroleum engineers. So it's something I try to advocate for.
Thanks, Ashley. Skylar, we have Skylar from Midland. I'm going to turn it over to you.
Hi there. I also work in the oil and gas industry, and I'm really curious about how specifically you're looking at ESG, and how are you maintaining a public image with that? I know that for EOG, where I work, we have started a sustainability report that we're going to do, I think quarterly, maybe yearly. Anyways, are y'all incorporating some of those type of public things?
Absolutely, we are. So great question, Skylar. It's specifically for publicly traded companies, which I'll address that side first. Black Mountain isn't publicly traded, but I'll address that as well. Every kind of broker or fund now has an ESG column. So the Bloomberg terminal, for example, can tell you if companies check certain ESG boxes or if they don't. And a lot of funds cannot deploy capital into a company that box is not checked. And so it really benefits a company to try to get on the front foot and be transparent about these issues and what they're doing with these issues. And certainly trying to be measurable and have those actionable goals that show that you're really trying to kind of move the ball down the field. You don't have to be perfect right off the bat. You just have to show what you're doing. And so in that way, I really do think the ball is very much in the oil and gas company's court, for exactly what you're saying, Skylar. So, EOG is starting to roll out these sustainability reports and try to be transparent with the market. I think that's the only way. Trying to kind of hold it back and not say anything, you're not doing your investors any favors. And so certainly think, that's where things are headed. And it's certainly what we do as well. So when we're raising new capital or just kind of reporting to existing investors, it is very much a focus. And, specifically another stakeholder that we're very focused on, although not publicly traded, there are our customers. And so, really trying to provide that transparency and that traceability to customers. Like I was talking about earlier, I think there's going to be a lot of focus on kind of third-party verification of this stuff. So, trust but verify. And so I can certainly see things moving in that direction quite a lot as well. But I do think every company, if you do not have a formal ESG program or ESG commitments, you should at least start thinking about it, because you're going to be your investors are going to start demanding for you to have one.
Great. Ashley, curious, just going back through some of these chat questions too. One specific, does Black Mountain have an interest in lithium mining?
No.
Okay.
So
Throw that out there.
No, I can't explain why. That's always like kind of a shocking answer for people, and I can appreciate that. If anybody is familiar with kind of the sand mining business, for example, so lithium, I would liken to kind of that business, and so there is a lot of lithium in the world, a lot. Inherently, it is the world's most prevalent element in its crust. And so in Australia, they're mining kind of hard rock lithium. Down in South America, mining lithium brines, bit of a variety, but effectively, probably, let's call it 3 years ago, a ton of capital was like, lithium ion batteries, I better go get some lithium and build a lithium mine, and we are doing this, and basically flooded the market with lithium. Now we're going through what we're seeing is a lot of the lithium players are starting to go under, and there's a lot of consolidation in the space. That being said, if lithium price rises, there is a tremendous amount of already built out lithium capacity that can immediately come online. So it's not a market that we want to get involved in right now. I'd say in 10 years, it becomes very, very compelling. And those folks that stuck it out and did the hard yards through this decade will hopefully be able to get returns there. But kind of the way we're thinking about it is maybe the third or fourth owner of lithium mines will start making money. Unpopular.
Okay. Great. Alan Burnett, one of our alums at Neely, from Houston. When will we reach peak battery creation? And referring to it in a parallel with oil, what would you, if you had to guess?
Oh my gosh. So look, I won't even try to guess that one. It takes someone a lot smarter than me who has better forecasting tools and abilities. That being said, I genuinely, like, one of my core principles is never bet against human ingenuity. And I think there's just so much to be done around battery recycling and really getting creative with what we're doing and how we're doing it. That I think anybody who would tell you an answer, they're going to be wrong anyway, because technology continuously evolves, as it should. Humans were not created to just continue steady state, just doing the same old thing. It's day in and day out. So I, for one, am certainly looking forward to seeing what technology comes out.
Our panelists, any other questions, Georgianne, Skylar, Ahmed, that you want to hear Ashley's thoughts on before we wrap it up?
Sure. Like, who do you find to be your competition? Like, how do you measure your success?
Oh man. No. So look, it depends which business it's on. And so, on the nickel side, so Black Mountain Metals, we'd very much be measuring ourselves against, like the kind of comps within Australia. So the biggest nickel miner in Australia is BHP. So, look at kind of what they're doing and see how you're measuring up against them. There are a ton of nickel miners in Australia because it's one of the largest nickel producing countries in the world. And so from that standpoint, certainly like to try to benchmark geographically similar companies, and then also choose best in class regardless of where it is in the world, and measure yourself on profitability and ESG standards. Again, no one is in business to lose money, so you can't lose sight of that, but just ESG is now a part of that for sure. And the same answer would go on kind of the oil and gas side. Certainly always aim to be a thought leader and see these trends coming and trying to get out in front of them and create real value. And so, there's not always a great comp to fully measure the entire business against, but you can always find a parallel segment within kind of the broader scale of companies.
Anything else from our panelists? Quick question. Oh, go ahead, Georgianne.
Sorry. One thing I will say quickly that I didn't touch on in the presentation, but is something that I inevitably get asked a lot. And I just want to plug it right here and right now. It's around domestic energy security and the fact that a lot of these metals aren't currently being mined in the US. When we were setting up Black Mountain Metals, obviously, like, we're in Texas, we said, okay, what can we buy in the US? Not a tremendous amount of specifically this type of mining activity. There's some exploration stuff, but effectively caught up in permitting, and it will take legitimately between 10 and 15 years before there's an actual mine there. And so we weren't able to make these investments in the US. So had to look to either Canada or Australia to find these kinds of resources. So this is like a call to action for folks in the resources space. We really need to get on the front foot and ensure that the US is participating in this next mining super cycle, because there's a tremendous amount of value to be created and a bunch of money to be made. And I'd love to see that, some of that being made here in the US. So if you're in resources, start kind of putting your mind to that and talking to whoever will listen.
Thanks, Ashley. That was actually the question I was about to tee up, was if you were thinking of going to a different geographic market, or even a different expanding outside of the current nickel space that you were in. If you were choosing to invest next, or someone else choosing to get into this space, where would that be?
I'm a believer that resources are complicated enough investments and projects to pull off that you should try to isolate as many variables as possible. So our personal kind of investment philosophy is tier 1 jurisdictions only, such that you don't have to worry about that geopolitical variable entering in to your overall investment thesis and investment capacity. People have different approaches there, but for us, it's really a kind of tier 1 jurisdictions, strong rule of law, good history of mining and oil and gas in the country, not just kind of the Lone Ranger maverick out there doing it by yourself.
Thank you so much, Ashley, and thank you for your time. We want to honor our stop here at 5 o'clock so everyone can move on with their day, but very enlightening, very interesting. I think it's also reflective, a short, small plug for the Neely programs and the programs that the Energy Institute offer, in that our conversation is changing. We were not talking about this much at all this time last year. And we have, I think, over 25 faculty members amongst different colleges at TCU that are teaching in the energy space in some way, shape, or form. And everybody's content is changing, and our conversations in the classrooms are changing. And, it's a great time, I think, for anyone that is thinking about going back to school and pursuing your education, either with a certificate or with an MBA or with a minor, if we have some undergrads on here. There is a lot to learn, and to lean into the expertise of the faculty as we navigate this transition is huge. And so we would love to continue that conversation with anyone. And you can always sit in on our classes via Zoom now. That's the nice thing about our new world. And our Energy MBA is offered 100% live remotely. So you can partake in that in whatever city you call home and get to be a Horned Frog. Ashley, we're thrilled to get to continue this relationship and tap into your expertise. What a blessing. And again, thank you so much. And thank you to the Institute, to Richard, and to the Ken Davis Lecture Series, who continues to bring compelling thought leaders like you on campus to make sure we're talking about the things that count and the things that matter.
I certainly appreciate it, and it was a pleasure to be here. I really appreciate you all tuning in, and please reach out if I can ever be helpful.
All right, I'm going to leave. So long, everybody.